Today on Resource Talks, we're looking back at 2025 and forward to 2026, specifically through the lens of Canada. Is it really still an investable jurisdiction, or are they falling behind in the mining and minerals race? And is there anything, if they are falling behind, is there anything they can do about it? That's pretty much what we're going to be talking about. But if you're pressed for time, go to resourcetalks.com and subscribe to our free newsletter, which will give you a 5-minute summary of this and all other interviews in your inbox once a week. The company you're about to hear from has paid us for the production of this interview, so please pause the screen and read the following disclaimers, as your capital may be at risk. Furthermore, with this company specifically, there is an additional layer of bias because Stephen is an investor in the company that owns this channel, and I'm sometimes an investor in some of his companies. And although I don't yet own shares of this specific company, I might own them in the future without a prior warning. This interview is intended only for experienced speculators because this is venture capital, and mining is a very risky industry. Failure is the norm and should be the expectation. I am not a licensed financial advisor, so this is not financial advice. It is just a conversation that is general and impersonal in nature, which also may contain forward-looking statements. If you're not 100% sure you understand the disclaimers I just showed you, please go to the last section of this video and do not consume this content unless you fully understand and agree with everything said therein. Also, please visit setterplus.ca to consult the company's official filings and do your own due diligence. That all said, not much more of an intro needed, I guess, here, Stephen. So thank you so much for being here today.
Hey, good day, Antonio. So great to be here and talk about 2025. What a year. Wow. So much has happened. And yeah, Canada's a very interesting place, very close to my heart. I'm not there right now, but I have lots to say about where it's been and where it's going.
But is it falling behind in the mining and metals race, so to call it? And if it is, why? What are the biggest issues?
It's not falling behind. It's fallen behind. It's way behind. But that's the opportunity because I do think, in a sense, it's hit rock bottom, close to it. I mean, it could go, worse. It always could get worse. But I think, statistically speaking, and if I were to make a bet, and I do, it's going to get a lot better. Because, look, brass tacks, it was run by an ideological government for the past 10 years, maybe, and who were it was just a folly, and it was all bizarre, and none of it made sense. And the truth and reality always sets in over time. I'm not saying the time is now, but the reality of economics is going to come into play. We accumulated so many bills. And we blew so much money on fake stuff in order to secure votes, as opposed to securing economic freedom and futures for our individuals and our jurisdictions, whether they be municipal, First Nations, provincial, or sovereign in the federal sense. We've been run very, very poorly. We have a new leadership in place. Same government, but definitely a new leader. The jury is out on how he's going to react. But I can say quite confidently that our new leadership is much more mature. We'll see how they fall on the ideological bent. But they so far appear to be making adult-like decisions that are practical, developing the economy. And I would make the argument that Canada, its metal endowments puts it second to none. If we were to develop it responsibly and sustainably, and as I've said before on your show, I think if we did that with a long-term view, and there's lots of challenges in doing so, but if we were to do that, manage it responsibly, we could be the wealthiest nation on a per capita basis, bar none. Includes Singapore and Liechtenstein. I mean, we have 40 million people, but we have a huge endowment of metals and minerals and oil and gas. Mm-hmm. And we need to get down. We need to double down on, again, responsible development of the extraction industry. That includes solving the infrastructure problem, which is a big issue in Canada because it's so vast and not all of it's developed. And you've got, not only lower your unit costs to discover it and develop it, but you got to get it out of the ground. And also, I think the single most important thing that we need to do is streamline our permitting. If government can do one thing, it's get out of the way. I don't really love how they're picking the winners, investing in companies, and we're seeing that south of the border, north of the border. It's not to say you can't have short-term wins doing that, but over the medium to long term, the government picking winners is a losing concept. What they can do is allow the free market to decide where capital should be allocated. And if we want capital to be allocated in Canada, we need to have these projects developed in reasonable timeframes. And the permitting regime has just gotten out of hand, where you see projects being developed, viable projects taking 20, 30 years to development. And then you layer on top of that capital allocation and the liquidity of capital, meaning it flows to the path of least resistance. That just exacerbates the permitting, because if you can't get permitting, you can't get the dollars, and so on and so forth. And that's why we have these elongated timeframes, which just have made us completely uncompetitive. And where capital is flowing to far, quote unquote, riskier jurisdictions. Now, we can talk about what risk is. Now, there is no riskless jurisdiction. You can go to Africa and you can get things permitted in a fraction of the time, but then, overnight you can be taken over by a coup and you no longer own anything that got permitted. So there's just a whole different set of risks that one needs to understand and manage as a long-term owner of a project like we are at the OreGroup. And Canada doesn't have these risks of waking up overnight and it's gone, but it has these timing risks, which relate fundamentally to permits, which is a broad topic with lots of subcategories within how permitting can be streamlined. But fundamentally, we need to get these things to market faster. And sorry to sum up, if we can do that, which is not an overnight process, if we can do that, we can be a leader again. That's what I think so I've said we've fallen behind, we've hit rock bottom. That's the bad news. But it's also the good news. The good news, we're going to rebound. I really believe that the adults in the room are going to understand that we have this industry right underneath our feet, where we have the skill set, the endowment, the capital markets, the reputation to leverage this for the benefit of Canada, to pay some of the bills and start increasing our quality of life, which has fallen behind.
I spent some time in Canada this summer myself, and just observing how big and empty the place is, really outside of the main cities, was impressive. And if Canada were to have the same population density as Belgium, where I'm at right now, it would have like 3.5 or 4 billion Canadians, which is funny to think about. But no, it's huge. It's empty. What is it though specifically? I mean, I hear that a lot about, the government's getting in the way. Oh, the government's doing this and that. And they are the problem. But who's they? Who's really is the government? Are we talking regional, provincial? Who's getting in your way, and how? More specifically,
all of the above. I mean, there is no one particular body that you can call. I guess that's part of the problem, is that the left hand isn't talking to the right hand. There are different branches. There's obviously the feds, which kicks into place once you hit certain thresholds on project size. So anything of size, the feds are involved. The mineral resources are owned by the province. So every province, and there's 10 of them, 11 if you include the US. And then, of course, there's municipal that are involved. They have less power, but I mean, it comes, call it from less power from a legislative standpoint, but they certainly have call it a social license stance. And then, of course, there's the First Nations who have a say, and they should have a say, but it really is a bit of a black box on who has to say what. I mean, and where those boundaries are, and oftentimes there's competing First Nations on the boundaries, and so on and so forth. So really, that is an issue that needs resolution for sure. Is what are their rights? Define them. Take away this black box aspect, so that investors, capital, can make well-informed decisions. It's unattractive to make an investment on something where you can't explain quantitatively And that's effectively what, the permitting, not just the First Nations, but the whole permitting. Nobody can singularly say, this is the permitting process, this is how long it takes, and this is how you go to, because there's just, this spectrum. And within that spectrum, there are various permits of, A, B, C, all the way to X, Y, and Z. And so it's really just this complicated beast that very few can navigate. So I'm not necessarily offering solutions, unfortunately, because that's not my area of expertise. Although I suspect if I got down to business, they wanted to engage me and come up with ideas, I could. But what I can tell you simplistically is that they just need to streamline it and satisfy certain parties and understand that you're never going to please everybody. I mean, I think that's been part of the regime of the past is trying to please everybody. But ironically, they're pissing everybody off. So, in a sense, in this instance, you have to sort of go with majority rules, if you will. It doesn't mean you can ignore the minority. You have to be respectful, because if you're disrespectful, that's bad business, and we're not after bad business. We're after good business. So, but you do have to pick a lane, I suppose, as my wife always tells me, and move forward and not allow special interest groups who come in all shapes and sizes to interfere with something that has national significance, but also significance down to the individual. Let's talk, it's important that Canada is competitive, but it's also important that, the North, you said Canada is a very big place. It is, but if you go 100 kilometers north of the U.S. border, which is the 49th parallel, there's pretty desolate. I mean, there's exceptions to the rule, certainly, but I think, the statistic is 90% of our population lives within that sort of jurisdiction or geographical boundary. If you go up there, it's pretty desolate, some beautiful areas, but it also has poverty, lots of it in these rural communities. And the best way, if not the only way, for them to be developed and have bright futures, as you and I would define it, is the extractives industry. And I've spent a lot of time up there. If you go to the Cadillac Water Lake Fault, for example, from Timmins to Val-d'Or, you drive there. There's this mine shaft, and it's quite populated. It's thriving. Very nice communities. Obviously, some are better than others, but I guess I'm just trying to make the point that without mining, those communities really would, I wouldn't say they cease to exist, but they would not be thriving. Mm-hmm. And so to me, that's kind of how Canada has developed itself. And the irony is, I talked about infrastructure. I mean, a lot of those mines, certainly the early ones, were discovered as a result of the railroad. And that's really just about building infrastructure. And they weren't looking for mines. They were building infrastructure east to west, what they call the Trans-Canada Railroad. And they were just sort of driving through the bush and boom, they saw outcrop. Right. So that's kind of how, certainly a contributing factor, how Canada developed its world-class mineral endowment. And if we were to build more infrastructure, you'd find, not just tripping over outcrop, but you would ultimately just lower the unit cost of discovery, right? The more steel you put into the ground in an educated way, the more likelihood you're going to discover endowments, mineral endowments, whether it be metal or gas or oil, whatever they are. So I think investment begets returns, not just for the country, but for the individuals, because that's what Canada is, just a collection of 40 million individuals. Mm. So I think we can improve the standard of living for everybody, but, those most in need, by getting back to business, like, again, serious business, adult business, capitalism, and doing so responsibly. And, the mining industry is tarred and feathered by, being this bad guy. That's a bunch of baloney. That's, maybe how it was 100 years ago, but so was every industry. And we've evolved. And I would say we're probably the best in terms of what they would call ESG, whatever that means. It's 3 different words, 3 different acronyms that all have their different meaning, but let's just use that as a blanket term. We care about how we treat individuals, communities, the environment, sustainability, not because we're Boy Scouts. Some of us may be Boy Scouts, but it's about doing good and sustainable business so we can come back again. And if you do a poor job of it, you can't come back again, right? So and that's the way the world is now, and I think everybody accepts that. So this moniker of being a bad guy, it's all bull, and it doesn't help us. It hurts us. But I think the industry needs to take responsibility for itself in that, and doing a better job at how we promote ourselves and educate people about the necessity of our industry, the absolute necessity. If you appreciate sleeping in a warm bed and having heat, go hug a miner. Forget about your iPhone. It's like the basics of life. We need this industry, and we know how to do it responsibly here in Canada, and we can do so to benefit the individuals, the First Nations, and start to pay some bills that we've accumulated as a nation.
You're not telling me you weren't a Boy Scout as a kid, were you? Selling cookies door to door?
I think it's a girl. There's a Boy Scouts. It's a girl guys that sell cookies. What do I know? I was neither. But no. Look, it's like I don't want to come off as I was like I want to make the distinction between being a do-gooder and it's about doing good business. And I just think that's how you have to operate.
Yeah. And you have to treat people with respect. I absolutely agree with that part. And just again, this year I've heard a lot about First Nations and the challenges in working in an environment where multiple groups are involved. And in Canada, there's very rarely only one impacted community. Some of the projects that I visited had 3 or 4 or more. I've heard about projects that have 8 groups that they have to deal with in Canada. So, you often have to work with multiple distinct groups, making the challenge even bigger, I suppose. But I'm hearing it even more so now when it comes down to BC. People are saying that it's getting more challenging in British Columbia, where I know you've done some work and you've been able to work around all that and still get meters drilled. So talk to me about how you got that done. And I suppose the selfish side for me here being, if I'm looking for a BC or at a BC Explorer, what do I want to see in the early stages and what do I want to avoid?
So a few comments on BC. Yeah, BC has been in the news a lot. The tragedy is what's happening with property rights and whatnot. That's a serious issue. I suspect they'll have to resolve that, because that could just talk about pulling on the thread. But outside of those specific issues, which are isolated in time and isolated to a particular government, BC is a wonderful place to do business. You have to have a longer term view than any one political regime or lifetime. BC has a long and established track record of mineral endowment, discovery, development, extraction. I think, they got Coal Harbor, and probably the toniest neighborhood in BC. Coal Harbor, you can see all the ships hauling coal out of there, whether met coal or thermal coal, I don't know, but it's coal. Anyways, BC is a wonderful place. It continues to be a wonderful place. There's definitely some risks on the horizon. I suspect they'll mitigate them. Fundamentally, and a lot of the new stuff in BC has to do with new staking, notwithstanding those, the property law issues. But if you have existing claims in place, and then I emphasize good relationships with the First Nations, and you check all the appropriate boxes, and you do your homework and you do things right, you can get permitted. Now, I mean, my statement, as I said off the top, about the length of is an issue, and BC wouldn't be, in my opinion, better or worse than any of the other provinces per se. They all have their own sort of specific little issues. But look, what's going on in BC is probably hyper-focused. I don't think it has legs. I do think BC knows very well where its economy is paid for. Even if they are taking it for granted under the current government, I think adults in the room will prevail. I think it's very interesting to see what's going on between Alberta, which is another very well endowed province, not really known for minerals, hard rock minerals, but oil and gas, and they want to get their oil, which has been funded a ton of stuff in Canada. They want to get their oil to Tidewater. They can't ship it west because, well, they can actually. It's a federal decision. The BC has no say, and But the federal government is being very cautious and they just don't want to burn bridges. But at the end of the day, I think they're just going to have to stand up and say, hey, look, I mean, this is of national significance. Our oil endowment, I would say again, oil and gas has been tarred and feathered. We have shot ourselves in the foot in Canada by um, um, not capitalizing on this mineral endowment that is, sea of oil that rivals Saudi Arabia and Venezuela sitting in Alberta. The problem is you can't get it to tidewater in the U.S. Has done us no favors. In fact, I suspect they've been complicit in blocking oil going east, west, or even north, if you want to get really crazy, so that they can buy it at a discount. We send it south. There's little doubt, and while I can't prove it, of course, but there's little doubt in my mind that's going on. Just follow the money, and who's making a killing off our oil and gas? It's not Canadians, it's the Americans. But I mean, I think we should be realistic in the oil and gas sense. Look, oil and gas is not going anywhere anytime soon. All these 2035, 2050 bogus. And I mean, I think the masses are finally realizing that. It's not to say that you want to, pollute, but this whole carbon craze has been overblown, and not only overblown, our competitors around the world have not been playing by those, ideological rules that have been imposed on our industry and really smothered the industry. And Alberta's so angry they want to leave, and I don't blame them. And Quebec, and then on the other side, Quebec is doesn't want the pipelines going east. So and Quebec wants to leave. So look, the provinces are upset and there's disharmony. And so look, I think, and then we're fighting with the Americans. So it's a whole lot of disharmony, which I think, if that's not specific why gold is going gangbusters and silver the same. But I mean, if you extrapolate that, they call it the insurance against geopolitical. That's why we're seeing precious metals go through the roof. I think it's the last couple of days it's been like really through the roof, and I think that'll sell off and stabilize. But it's hit these highs, and over with the short term, that has to pull back. But over the medium to long term, expect us to build that base and continue higher than these highs over a long period of time, because these insurance. No counterparty insurance, if you will, that physical commodities provide are amazing. Well, not amazing; it's not the right word, but they are insurance. They give you stability. They give you assurance that your counterparty is legitimate. Whereas the U.S. has been weaponizing the dollar, and all the central bankers are now reducing their exposure to either USD or the reserves, or excuse me, the bonds. And where are they going? Where do you go? I had this conversation with my wife. Like, what's the alternative? You want to buy the renminbi? You want to buy the yen, the euro? No, I'd rather buy gold. Why? Because there's no counterparty risk theoretically. It poses other challenges like security. Where do you hold it? How do you access it? Ask the Germans. It's not that gold is the perfect solution, but it seems to be the best alternative to the U.S. dollar, and maybe even silver is becoming its little brother there. Obviously they're paired. But anyways, the last week has been like chaotic in terms of big commodities, whether it's platinum, palladium, gold, silver, and copper, and I don't think it's like, they're all different. Like gold behaves different than copper for different reasons, but they're all connected. They're all tangible physical commodities. And I think capital is flowing into that. And that's an opportunity for our sector at large and an opportunity for Canada as I go on and on. So I forgot your question, but I'm just going.
It was specifically about BC really in this case, because I'm even really thinking, are most permitting wounds self-inflicted? Is there really even anything that a BC explorer can do right versus wrong, or is it just the jurisdiction that is problematic?
No, well, you can go about it the wrong way. There's no question about that. We try and we do go about it the right way. We're very cautious. We're very careful. We're very respectful. We follow the regime. Not to say that the regime is perfect, but there's a system in place, and you follow it to the best of your ability. The system in place needs to be streamlined for all parties. It's not to say that our counterparty on this is being unreasonable, but these are the rules of the game. I don't think anybody really likes them. because they're not really working for anybody. I think, the counterparties, whether they're local or First Nations, want respectful development. They want to ensure clean air and clean water for their children and grandchildren. Me too. That's reasonable. Okay, check. They want a piece of the pie. Yeah, I get it. Check. No problem. What else do we need to do? I mean, fundamentally, the devil's in the details, and I don't need to be too simplistic, but fundamentally, they want a piece of the pie, and they want it done top-notch international standards. Okay, well, the industry's on the same page there. So, let's get down to business and solve, the smaller problems, which are not bridges to die on. Mm-hmm. So to answer your question, oftentimes, yes, you do get inexperienced operators trying to, who get frustrated and just say, screw this, and then they make a bad decision. That's not a good way of doing it. And then it's just the system itself, which probably came from good intentions, again, trying to check those two boxes I talked about, but, good ideas gone way too far, that have turned into bad ideas and just layered upon layers of bureaucracy, and nobody knows what they were there for in the first place. That's the biggest problem. It's like, nobody knows what they're, all these permits are needed for. I mean, really, it's just about developing responsibly and making sure the pie is split fairly. I mean, that's what they're all after.
What is a sure way, I suppose, to get one of those self-inflicted permitting ones, though? And specifically because you also had some challenges a while back, maybe 2022, 2023, maybe maybe even before that, in Saskatchewan with baseload, which you and I have talked about before, and I've talked to James about it as well. But just again, going back to the selfish side of it all, when I'm looking at a junior, what are some of the early signs that they're in the process of self-inflicting that permitting one? Is it wrong baseline work, engaging the community too late, inconsistent engagement? Yeah, what are some of the things that we could do wrong as an industry?
Well, first of all, you said that I had problems back in 2022. That's wrong, Antonio. I had problems every day. Some of them just don't make the CBC. You can do everything right, but that doesn't mean that you please everybody. Speaking to whether it's government or a local community or First Nations, when you're speaking to one, that doesn't mean you're speaking to all. You're talking about baseload. Baseload actually did a wonderful job when baseload was run by James Sykes. James is very knowledgeable with First Nations, very good relationships. We know exactly what to do. We did everything right. We were permitted. We did consultations, but that was, keep in mind, that was during COVID, and everybody was really like, it was all. I think that community was really going through some tough times, but there were some people within that community who didn't necessarily speak for the community at large that took exemption, and it snowballed. That sort of thing can happen, no matter how good you are or how good you think you are or what boxes you check. So that risk always exists. Now, I would say 95 times out of 100, you can mitigate and resolve that, sit down at the table, break bread. It's important to find out what they're really after. And this is not specific to First Nations. This is specific to any negotiation. What is the counterparty really after? What is important to them? More times than not, you can give it to them. But the trick is finding out what they are really after and cutting through the emotions too, right? Sometimes, things can get heated, and it doesn't matter. You got to calm things down, and then you got to sit down, you got to listen. And then, you got to go back and forth and figure out what the real issue is. Because often it's, again, ultimately, almost every time, it'll go back down to how the project is being developed and who gets to develop it in what way, meaning who gets a piece. Sometimes there's ideological, sorry to interrupt, but just to finish the thought, sometimes there are ideological issues, meaning, some groups say, well, and frankly, governments say, we will never develop, a gas project, never. And so then you got a real problem. And, but, rarely it's about ideology. Most oftentimes it's about those two things.
Yeah, no, that's actually exactly what I was going to ask. Is it ideology most of the time, or is money the issue most of the time?
Always. Money is always an issue. I mean, is it the issue? It's not necessarily the issue every time, but it's always an issue. It can create problems. It can solve problems. The answer is it depends fundamentally. And oftentimes, just going back to the ideological standpoint, oftentimes people will use ideology as a blocker, right? But it's really about the money. We see that all the time, and not specific to OreGroup, of course, but just in in Canada, around the world. I mean, we're all human. We're all the same. I don't care what color you are, who you pray to. We all have the same wants and needs, just like Maslow prescribed in his little triangle. I mean, so that's fundamentally who you're negotiating with. It's just people.
What do you think is a jurisdiction that has become underrated this year? One that is it BC, one that people maybe look unfavorably toward, but is really good. Taking into account what we've just talked about, but also taking into account all the rest in terms of infrastructure, accessibility, cost, and so on.
Well, just Canada as a whole. I mean, not to get specific, like Canada is underrated because it's well known to have fallen behind. And me as a so-called contrarian type, and I do have this contrarian type because I think that's the best way to make money, is to look at these places that are discounted and then understand why they're discounted and make a thesis as to can these problems be solved and when and at what cost. And I do think, again, I've made that thesis on Canada a long time ago. So I wouldn't say that I foresaw everything that has happened here, but a long time ago, the writing was on the wall that we were ignoring this industry. And there was an opportunity to buy things cheap. And then on top of that, you can buy things cheap in the metals industry because the metals industry also has its cyclicality. And as you well know, that for the past net 6 months or 9 months, whenever this sort of turnaround has begun, things have been cheap. So you can buy cheap metals projects in an underappreciated jurisdiction. When I see assets, and it's hard to value these things quantitatively because there's so many variables, but just high level, when you see a gold project being valued along the same metrics and multiples as a project kind of anywhere else in the world, specifically Africa or any of the other jurisdictions that have other harder challenges. It's a good time to bet on Canada, and Canada has really no ostensible premium for its pounds or ounces or barrels in the ground. And to me, that's a contrarian bet. I think, again, going back to my opening statement was Canada has to develop, it has to take these seriously, not just wants to, has to. We don't have a lot of cards to play because we do have to catch up, not just on the metals industry, but just on the infrastructure. We've welcomed a huge amount of people into our country as of late, and we don't have the infrastructure, hospitals, roads. I mean, it's just dirty. Honestly, Toronto is really degraded. And I come down and I travel, all over the world, and I see other cities, and it's upsetting to see that a place that used to be clean and safe, not that it's totally dirty and unsafe, but it's degraded. There's no question about that. And Vancouver the same, and Montreal is not far behind. So it's upsetting, especially when the answer is right under our feet. And we know how to do it too, right? We have the skills. It's not like we're starting from zero. We just have to make a couple of changes, and we can be leaders. We can be as clean and shiny in terms of our infrastructure and architecture and buildings as Singapore and Dubai and all these other places where they're nice places to visit, but I wouldn't want to necessarily raise a family there. I mean, I like it despite the harsh weather, which I don't love. Canada, Toronto, where I was born and raised, is a wonderful place to raise a family if we can get back on track. So, as nice and shiny as some of these places are to visit, again, they're not home to me, but also they're just, they have their own challenges. They just happen to have better infrastructure, much. So I think it's ripe time for Canada to get its act together, leverage its advantages, and invest in our future.
Well, and what you're doing at the OreGroup, which is what is mostly Canada focused and across many different provinces, I think 4 of the 7 provinces and 1 of the 3 territories is what you're operating in right now.
Sure.
And you're doing that despite the issues we talked about here. Is that really a viable investment strategy? Is Canada still investable? That was kind of the opener there. But
Absolutely,
is
everything's
it like
investable.
long
It's a
term?
function of
Is it?
price.
No,
Sorry.
no, go ahead.
Well, yeah, of course it is. It's just a function of price. As I was saying before, you got to, you have to be paid for the risk. And I think we've been acquiring assets in Canada and in specific metal silos at discounts to their future value, material discounts. I do believe that the metals suite, metals industry has the potential to be completely re-rated, not just re-rated, but revalued. I've always said, like being an ex-analyst, these spreadsheets, IRR and PV, are totally useless in valuing long-term assets. And what they have value for is juxtaposing project A versus project B in comparison. Okay. But as a standalone to value 100-year life of mine. And I mean, it's useless. And in mining, you want 100-year life of mine. If you're owning and operating them, ask the big boys, right? You want long life. Cote Lake project, very close to me. It was 30, 40 years. Put that into a spreadsheet and see what, year 20 looks like. It's probably zero, but I guarantee you, whoever owns it in year 20 is going to be very happy they do. So that doesn't, it's really a long-term business. As again, I've gone off track.
Well, yes, it is, and that's what I was asking about. Is Canada investable as a jurisdiction? But actually, as I mentioned that, I was also thinking about what about more on the macro level for you specifically as a group. Again, 4 out of the 7 jurisdictions, and that makes me think: is the group getting too big or too large as it is? I mean, it's 8 companies, and you're doing a lot of work on the board level yourself, even though most of them have different CEOs. But yeah, is the group not getting too big for its own good?
And no, I mean, what is too big? Who is to say it is too big? We're not interested in getting big. I'm interested in quality opportunities. So I believe we have eight publicly traded companies now. I suspect there will be a 9th, but maybe we'll sell one of them. I mean, so it's really not about the numbers. I don't count. I'm interested in quality opportunities that can be acquired at good valuations. Oftentimes, those 2 things come with problems that you have to inherit or acquire, problems that we believe we can solve. You have to have the right people that you couldn't put in place, which is critical. It's all about the people in this industry, and then you have to finance them. So, if we see opportunities that are attractive, and again, I define attractive by saying, does this have the potential to be a mine? I mean, that's how we always look at something. I mean, we're not speculators, right? When we acquire something, you're marrying. So it can't be, it can't have a fatal flaw that we can identify. It doesn't mean that there isn't one, but that we haven't yet identified. But the point I'm making is that we take 5, 10, 20-year timeframes on these things because you must. And so, so that's how we evaluate them. So we tend not to chase scandium, because we don't understand the market. B, it's opaque, and I use that as an example for called the exotics, and it's hard to forecast the long-term characteristics of those very niche markets. So we focus on metals that are typically traded in spot. Uranium would be the exception, although there is some spot trading there. But copper, gold, nickel, silver. We stick to the big boys as much as possible. And if there's an opportunity to be had, we're going to take it. I mean, that's just in my nature. But it comes down to people though, right? I mean, if you have 8 companies, I mean, you're okay if you have 200 people, not to say we have 200 people, but it's just a function of having the right people to be able to manage and delegate it. And yes, I'm involved. I'm trying to, and I have come a long way in taking myself out of the day-to-day operations of these companies, but I'm very much involved in the call it big picture strategy, work very closely with the CEOs who are very carefully picked. And I would say I'm deeply involved in how they're financed. And so that's my value add. It's just my how I view the world and my knowledge of assets, my knowledge of people, my connections, and the ability to raise money, with my friends and with my colleagues. We've been very successful to call it what I call the three silos of capital, which is the retail capital, the institutions, which are, you call it deals done through the banks and brokers, and then strategics, your operators, who are the real strategics. And we've been very successful at identifying projects that appeal to each of those silos of capital. They're willing to finance us. So, I mean, that's who I listen to. I don't listen to, the chat boards or Twitter. I listen to, can we finance this? Can we find the right people? That's, again, my biggest challenge is finding the right people to run the day-to-day, because I can't run the day-to-day on all these things, and I don't.
And here's when you ask who's to say what's too big, or where I'm really coming from with that question is, how do you determine where your time goes when two or more really companies need money and attention at the same time? And I think that all of them need all of the attention at the same time. So yeah, how do you distinguish between that within the group?
You just take it as it comes, right? I mean, you go through, you triage things, and not everything happens all at once. But it's constant, right? Like we're always cognizant of our cost of capital and our access to capital, and when we're going to finance, how we're going to finance, who we're going to finance with. I guess just through experience, you get a pulse for what needs attention now. You look at the current balance sheet, you look at the burn rate, and you say, okay, we sort of forecast what our plans are, when we need the capital, do we have the capital? Companies like, what did we just finance? Metal Energy, we just financed. It's got $10 million in the bank. Okay, so I don't need to worry about financing it for the foreseeable future. We just financed Original Metals. We don't need to worry about it for the foreseeable future. American Eagle's got a huge balance sheet. Wally financed, this year with, so, and then, there are other companies that are not as well financed for its particular activity. So I'm thinking about, okay, well, when do we need to pull the trigger on that? So look, it's just, I look at, just like anybody else, I wake up in the morning and I look at my inbox, and I go through it, and I solve each of those challenges. I view every email I have as a problem that needs to be solved. A lot of it is delegated down to the CEOs or other people on our team. But it all comes back, to me, and we just work through problems one step at a time. I mean, I don't know how else to describe it.
Well, and I get that, but wearing kind of my speculator's hat here, how could I know from the outside looking in that it gets handled? Like, are there any, I suppose, governance firewalls or anything like that objectively takes care of the potential conflict of interest or the fair allocation of time and money across the group? Like, because again, I own shares of Metal Energy. How do I know it's going to get your full attention? How do I know it's not, another company is not going to get the preferred treatment over
It doesn't get my full attention, right? I mean, like, it can't get my full attention. I mean, it gets my full attention for as long as it needs it, and then I move on to the next thing. And then we have Charlie Gregg and his team underneath him that run the day-to-day. So look, as chairman, which is my role, I'm not on the ball 24/7, 365 on any one particular company. That's not the chairman's role. That's primarily the CEO's role and the team underneath him. So you have to have, faith in the team as a whole. It's not just me. I'm not the OreGroup, and I'm certainly not a Metal Energy. Metal Energy is a team of people, much more than you or anybody sees from just the outside looking in. There's lots of people working day to day, grinding out the various challenges we have, whether it's communications, whether it's planning, drilling. I mean, permitting, you name it. We've got a team managing that, and then there's the back office too, stuff that people don't care about. But it's super, super important, especially when you have a business of scale like we do. When you have 8 publicly traded companies, that's 8 quarterlies, 8 annual. I mean, that's a lot of work. We have an amazing team. I'll give a shout out to my buddy Joel, who oversees all of that and has developed a team underneath him. And we've got a very well-oiled machine on doing that. Prior to Joel, I had other CFOs, and I said, make sure our quarterlies, are filed, and our annuals are filed on time. Don't get us these traded, and pay our people. And I would say for 90% of the CFOs out there in the junior world, that's what they do. When you've got a group as sophisticated as ours, and a guy like Joel, Joel does that, but has a team to support him. We've got a bookkeeper, we've got a controller, and others that plus auditors, etc. But Joel's in the deal room too, threading the needle on all of the many securities and exchange rules and regulations that we're required to abide by, whether it's just on the day to day or when we're doing M&A or starting a new opportunity. Which, on that note, we are starting new opportunities in the OreGroup for Orecap, one of our publicly traded companies, which has equity exposure to most, not all, most of OreGroup companies, material positions. It's got 3 shell companies that in there that eventually we suspect will be future companies. So, companies of interest, we'll put assets in them and so on and so forth. So we're always looking. And again, I view OreGroup as a vertically integrated shop where we can do everything from evaluate opportunities, see if they're viable and at good value, finance them, manage them, geology, engineering, everything. So that we like doing it that way. So we have our hands on everything, because we have consultants too. But just as a general rule, we want our people waking up in the morning and thinking about our problems. Consultants think about theirs. So we try. We love what we do. I mean, I'm not being a Boy Scout about that, but if it's your business, you love it, you treat it. It's home cooking, right, as opposed to McDonald's. So we take great care of what we do because our reputations are paramount, and we don't want to deliver garbage. Now, let me be clear. I do see, as much as I try to avoid the chat rooms because I can just feel like, oh man, this guy Steven's a real jerk. But it's just like some of the time the expectations is that you're batting 1,000, and we don't. And I don't make any aspersions that we do. This business is, as I've said it many times, failure is the expectation. You have to beat. Beating the odds is something that we've done quite well. Is great. So investors really, not to say that they can't get in and out and be disappointed with failure, if you will, if you want to define drilling industry as failure, fine. But look, it's about mitigating the risks of these high risks investments. You do so by investing in people. I think OreGroup represents a high caliber of people who are serious about what they do. We have these core philosophies that we stick by, which are all methods that we've learned by failures that we've made or mistakes that we've made, and in the never-ending pursuit of trying to get better so that we can increase the, what is it, the odds of 10,000 to 1 anomalies? I mean, that's not true. It's true if you're a newbie, but if you know what you're doing, you can drastically mitigate those risks and reduce that ratio to something that's palatable. Again, failure is going to be the norm, but there's a reason Robert Friedman and Ross Beatty and Rick Rules, they know what they're doing, and so their odds of success increase. I think Rick Rule has very well. He's got lots of great sayings, but it's just about investing in great people. I think OreGroup has great people across the board, and we're out there trying to be the next generation of the Lundin dynasties who have had now 3 generations. So I'm not saying that's who we are. We don't want to be the Lundins. We want to be us. But the point I'm making is that if you're good at what you do and you love what you do and you're determined, you're eventually going to be successful.
Good point on home cooking versus McDonald's. I grew up on home cooking. My mom's a great cook, and my wife's a great cook as well. I'm not going to say who's better because otherwise I might be sleeping on the couch or my mom's not going to talk to me. But I still enjoy McDonald's once or twice a month. So it's an interesting point. It's an interesting metaphor that I can think more about. But no, listen, I'm coming again from the perspective wearing my speculator's hat and thinking about all that in context of risk reward specifically, because and this might be a bit of a ranty question here, but the GDXJ had a monster year, really up 150% today, but year to date. But looking at the performance of the individual companies that make up the OreGroup, there's again 8 of them. There's 2 of them that outperformed the GDXJ. So that's Metal Energy. It's up nearly 350% on a new deal just in the last couple of months. Original Mining, new name, which is a spin-off, there I say, it's up 250% year to date, and then you have Stardust, which was Mustango up until recently, which is also up, lagging, but it's up 100% year to date. Orecap, 80% higher. Wally Resources up about 60%. Fair disclaimer, honest confession, I own a bunch of that as well, but or at least a bunch to me. But the other three, so you have baseload, which is now Geiger, that's down over 50%. Uranium market's not been doing well, so that's not, you can compare that to the GDXJ. But American Eagle down almost 30%. XXIX, which was QC copper and gold until recently, basically flat, so that down just a couple of percent. So two are outperforming, three are up but lagging, and three are down. And again, that's happening in a bull market. So everything we've talked about so far, including Canada and the OreGroup itself, why would I take the risk with individual Canadian explorers like the ones you run instead of just sort of index and chill, I suppose?
Well, maybe you should. I mean, I think you should have a diversified approach. Again, it depends on who you are. It depends on how much money you have and how much you're risking and what your tolerance for risk is. To the generalist investor coming in who doesn't have the time to do due diligence on the specifics of OreGroup, say, companies or the 2,000 juniors that exists, probably the best way to do it is get some indexed exposure. If you know what you're doing and you follow the industry, you can afford to take a little bit more risk. But again, everybody's risk tolerance is different and allocations are different. But to me, how do I answer that question? I mean, first of all, I don't get caught up in the indexes and benchmarking. There's too much volatility in this industry for it to be defined empirically within very tight time frames, and I do define 25 as a tight time frame, and one that had massive volatility. One there, and look, any one junior can go up, 25%, 50% in a day. The junior industry is the most, and this is why you should try and capture alpha on particular companies if you are prepared to do the due diligence. Okay, and I emphasize you need to do the work. If you're just guessing, don't. But if you're prepared to do the work, the junior mining industry is the most inefficient industry sector in the world, bar none. Okay, because there's a lack of information, a lack of understanding, lack of liquidity, which adds to that. So look, if you can find undervalued gems. You referenced XXIX, which is an undervalued gem. My goodness, is that an undervalued gem? And then you call it flat. Does that make it to be yeah, sure. If you're owning it just, for speculating, and lots of people do, great. It's been, I guess, disappointing in 2025. And that's very frustrating to me because I see so much value in what we had there. We delivered it. Literally, we had an amazing PEA. Near a 30% IRR, right in the middle of Quebec. There's the perception of risk there is the town. We're proximate to the town. That mine is going to be developed. Okay, that is my forecast, forward-looking statement. But I mean, the town is supportive. The province is supportive. It's a copper project in the heart of Quebec. There's very, very few of these things. And the mine, the town wants it, right? Like they want it. Like they literally, again, I don't speak for everybody in town, but everybody I've spoken to wants it. But again, it doesn't mean they don't want it done responsibly. It doesn't mean they don't want, it done to the top-notch standards. Doesn't mean that they don't want a cut. They do. But there's a viable, we demonstrated a viable project there. We didn't get paid for that PEA in terms of equity appreciation, but it will come. And then on top of that, we have the cherry, which is honestly, more valuable than Optimistic. Okay, it will be. That's what we see. But it's 2 years behind the development and definition in terms of resource and PEA. But cherry is a sleeper, and it's going to be unlocked in 2026. Start to unlock. I don't make any promises overnight. These things take time. So it's not just about 2025. It's about long term. Let us develop these things, and you got to be patient. If you're hoping to flip in February, go by the GDXJ. I don't know. But XXIX has, probably the biggest disconnect. Again, going back to my point about inefficiency, the biggest disconnect between price and value, certainly in our portfolio, because we've got two projects that I believe will be mines, and that always fundamentally goes back to the question is, can this be a mine? Well, look, they're former producing mines. We've looked at them in a different context, whereas underground mines turned into open pits. Well, that's worked out okay for the Malartic, Cote Lake, and Detour. we're trying to do the same thing in copper. They used to think the guys at Osisko were crazy for mining a gram gold. Now it's the like cash cow, like no tomorrow. It's probably Agnico Eagle's best asset. So that's what we're trying to do with copper. And the other thing is, like, there's just not a lot of these things. There's not a lot of copper assets, certainly in Canada. There's very, very few. Obviously, you've got the BC porphyry thing going on, but those are completely different beasts. One of those gets developed per cycle. Hopefully, it's American Eagle, or maybe we make a nice discovery on metal energy. Wouldn't that be fun? But on the East Coast, you've got 3 assets. One of them is owned by Osisko and their Gaspé project. That's a big beast. It's probably akin to a porphyry in its development profile. It'll be a mine again because it's an old mine, but it's probably going to have a $3, $4, $5 billion capex, whereas ours are going to have smaller capexes. Infrastructure is there. The metallurgy is known and understood. They're sort of medium-sized project, Goldilocks projects, as I like to call them. You can get 2 of those built in a cycle, and it's not like a Rio Tinto BHP project, which people always love. But not that I don't like big-sized projects, but there's a whole world out there of people who develop medium-sized projects, that people who can't afford a multi-billion-dollar capex, which XXX offers that opportunity times 2. So while it has underperformed in 2025, as you said, relative to indexes, et cetera, I think it's hit it out of the park. Technically, the market just hasn't woken up.
Yeah. To the point of Orecap, and we'll do an interview on Orecap specifically. We'll do a CEO barbecue because there's grilling to be done there as well. What is what's the plan there, though? I mean, what is it? How does one make money on Orecap if the market is consistently undervaluing you for the sum of parts thing? Because are you going to pay a dividend, or how does one make money on that?
Well, I think, what are we up? I think, look, at the beginning of the year, we're probably at 5 cents. Now we're at 10. So, I mean, they've doubled their money. I've heard of worse investments. Are we going to do dividends? There's no plans to do dividends. The company itself has done dividends, multiple dividends in the past. I have learned the hard way that irregular dividends are not a good thing for publicly traded companies, because people pile in, on the record date, and they pile out tomorrow. And what have you done? What have you done? Nothing. It's about building sustainable equity value. So Orcap, what are we doing? Well, look, I think, we will conduct the sum of our equity portfolios, which includes, big position in Stardust, American Eagle, Wale, XXIX. Those will continue to grow. Like, if we are in throes of early days of a bull market here, those positions are going to grow materially, I suspect. And so even if we are valued on a discount, the baseline will grow, so, I mean, which is clear. It's happened. We've doubled in 2025 thereabouts. But expect new things. I mean, the whole premise of Orecap is to give investors a diversified exposure to what OreGroup does and what I do. I tend to invest, personally alongside in Orecap's deals. Doesn't always happen that way, and there's no, fixed rules, but that's what we try to do. There's physical assets in Orecap. You can see us, we monetize one with a deal that has not yet closed, but has gone definitive on agreements. We become a 19.9% shareholder in Kirkland Lake Discoveries, which is has a huge land package. And now they've got our Murado asset there. It's given us, and that was a great transaction. The market sort of has started to take notice of it. But what we did is we took an asset called Murado, which it's a nice asset. It's a good asset. It's got 2 former producing mines on it, not a huge scale, but can get bigger with love. We were getting zero value for it because you define Orecap's value by a discounted aggregation of our equity portfolio. So in theory, we had no value for Murado, which is false. But anyways, and then we sold it for 50% of our market cap. Not a bad transaction. In fact, I think, wow, great transaction. So for something that we were getting nothing, we received 50% of our market cap in a completely arm's length publicly traded company run by people who know what they're doing, and so that also gave us a diversified, just sort of a sleeper strategy thing here. Is like, instead of having an isolated piece in the Murado, now because KLDC has a huge land package all over KLDC, well, we have 20% of a massive land package in Kirkland Lake, who I remind everybody is a world-class camp, dominated by Agnico. They've got their Macassa, the highest grade gold mine in Canada, operating there, and it'll operate for decades to come. They've got their new development, the Upper Beaver, which is chugging along. It's going to be mined soon. I don't know the exact time frames, but they're getting there. I think they've sunk the shaft. Like they're well on their way. And then of course we've got Gold Camp, which is owned and operated by not owned and operated, but the controlling shareholder is Pierre Lassonde, who is probably one of the best gold investors in the industry. And they've got a $700 million valuation on the Kerr Addison, again, former producing underground mine, turning it into an open pit. I'm not the only one doing that trend. Mr. Lassonde is. And so, and then, which leads me to the fact that McGarry, okay, so let's talk about McGarry, which is owned currently by Orecap 100%, but recently went into an option agreement with Stardust, which is committed to spend a whole bunch of money over the next 4 years in order to earn 50%. And what's it going to do? It's one, it's going to develop to characterize the tailings, because we own the Kerr Addison tailings, which was one of the highest grade gold mines in Canada, operated for 50 years. All the tailings are on our project. Those are high value ounces. That's very interesting. If you think about, look at the metallurgy. You want to do due diligence, I won't quote the numbers, but look at the metallurgy, the recoveries on the Kerr Addison, and then you can impute how much gold is sitting on the Trans-Canada Highway on our project. Those are high value ounces that can go through any project early, helping out IRR and NPV. As much as I dislike how those are calculated, but that's those are the rules. So our project's very valuable. And then what I think is most interesting, and something that I'm most excited about. In fact, we've got 3 potential discovery drill programs going on this year, but one is on McGarry. And I encourage everybody to go to our YouTube channel and watch Charles Baudry run through this very, very large geophysical anomaly that checks all the boxes in terms of what you want in terms of the geophysical anomaly that has been undercover, right? Because Kirkland Lake has been mined for 100 years. There's very few things you're going to find at your feet. Meaning an outcrop. So you need to look undercover. We did an MT survey, a magnetotellurics, which sees up to 1 kilometer deep. It's relatively new type of technology. And so this is how the next generation of mines are going to be found. There's a sedimentary cover, meaning not much in the sedimentaries, but underneath there's this ultramafic package that we found, and we saw a huge geophysical anomaly that we're going to drill. It's right on the Cadillac break. In terms of zip code, there are a few better zip codes to have next door to the Kerr Addison, which had 11 million ounces, down the road from Macassa, and just a stone's throw from Upper Beaver. So that could be totally game changing for Orcap and Stardust. I think it was a really creative transaction that we structured there that allows McGarry to be de-risked, devalued, and explored. So, I mean, that's a major catalyst right there. That could just be fundamental. Now, again, it's in a sense binary. Either it is or it isn't. If this geophysical anomaly is gold bearing, that is very significant. But it might not be. That's the game. But those are the risks that we are paid to take and vet.
What about the longer term plan here for the group though as a whole? Because that's only year to date that I talked about, but on a 5-year time frame, American Eagle is the only one that's doing well on a 5-year time frame. So is there? But there've always been these opportunities, and sure, you've matured a lot in the last 5 years, and some of these companies you weren't even in control on 5 years ago. But is there something that you're going to change structurally, or something that needs more fixing going forward? Is it more marketing for Orecap? Is it more risk for some of the explorers, or less? Or what's going to change in 2026?
Well, I think we're constantly changing. We're constantly learning. You reference marketing. That's something that I struggle with all the time, is how we communicate with shareholders. We try very, very hard, and I think we were very open and candid. I still, respond to all my emails. When they come through, or anybody who calls, we call them back. We pay great attention to communicating en masse, and we do so through channels like yourself, but also our own. We've invested quite a bit in our YouTube channel and our social media channels. Social media is like iffy on whether that creates any value, but it's cheap, so you might as well have it. But what I think is absolutely critical is our videos. And so people can sort of see the whites of my eyes and hear perspective. And the same is true for all of our CEOs. So I think that's critical. But I'm always wrestling with how we communicate. It's not just the methodology or the medium. It's about what you say and how you say it and when you say it. I think we do collectively as good as anybody out there. But you also, it doesn't replace the fact that you got to get out there and you got to hit the street and see people in person. And then there's other ways you can market. I mean, God, there's no shortage of, inbound, guys or gals who, say, I can get yours, eyes on your story. I mean, look, most of them don't work. Some of them every now and then do. I mean, I think, I always go back to the introduction of video and the podcast. When that medium came into play, which wasn't too long ago, it was novel, it was new, and you could go out there and you could go on a channel like yours. And since there wasn't a lot of competition, you get so many eyeballs. But now this medium has become, I won't say ubiquitous, but commonplace. And so the alpha on doing an interview such as this is not as high, on a direct basis, although it's very important in developing trust. So I try not to get fixated on the quick fix and the sugar rush of some sort of campaign that gets your stock price up 20 cents and then the back end goes down 30%. I mean, what have you gained? So really, it's about slow and steady. As much as I love, big, sugar rushes, I like to see it, but it's really about slow and steady communication, developing trust, being candid with investors. And that's what people can expect from us going forward. Are we changing and pivoting? Constantly. I mean, you got to take what the market gives you. Not just an operations basis, but on a future investment basis. So yeah, we're always shucking and jiving and pivoting and moving and thinking and trying to do things better and fixing mistakes. That'll never end.
What are pivot criteria for you? Are there kill switches going into 2026 on each company? And I know we talked about this last year, I believe, but what's changing now that we're in a bull market? Are you going to judge opportunities for either acquisition or divestment going into the new year? Are you going to judge it differently, or how are you going to approach the market differently? Yeah.
Well, absolutely. Everything is the macro is probably the most important, meaningful thing. Outside of the discovery hole or something like that. The macro has the most impact, right? So you can take a company that's valued at $20 million in a mediocre market, and then put a bull market on top of that, and they don't really do much, and before you know it, they're $60 million, right? So yes, the lens of a bull market changes the perspective and changes how one operates. It absolutely has meaning for divestitures and acquisitions. Let's talk about divestitures. I mean, sure, it'd be nice. Our objective here is to harvest our gains as operators and owners, right? We're in this for the long haul. We're going to sell when the company, we're going to get paid when the company gets sold. So we're always thinking about selling. And people say, "Oh, why don't you sell?" Well, it's too early, and we haven't realized the value. And so, XXIX, for example, I see many times multiple return on the valuation of OpenMythica there, and then we haven't even started to realize the value of Cherry. So, do I want to sell it tomorrow? No. Do I want to sell it at 2x to what our value is today? No, I don't. But do I want to sell and harvest gains for me and my shareholders? Of course I do, but I want to maximize the value, and we're not there yet on the project level, but also the macro level. I think this thing has legs. On the acquisition side, it makes it more challenging because everybody who has a project thinks it's worth 2x, or they have the same mentality as I do. They don't want to sell too early. So, which is really always true. Everybody always thinks it's worth more than it is, bull or bear market. And that's why we've been creative in how we acquire opportunities. You have to sort of look in the trenches, try and find problems, whether they're management problems or other issues where you can eke your way in. So yeah, I mean, we'll continue, and problems always exist. So you just got to be cognizant of the problems. And deal flow is also important. Not that this is relevant to what we're talking about, but the fact that we've done, a lot of deals now, people come to us. And so we get to choose from a higher quality. And then the last point I'll make is that eventually, we'll go up the risk curve. As of late, when I say go up the risk curve, meaning more grassroots stuff. You'll see, as 10 years ago, nobody was paying, last 10 years, let's just say, and I call it the bear market. Nobody was paying for grassroots. I wouldn't say nobody, but it was really hard to get things financed. And obviously that's higher risk stuff. As the more mature projects become more and more expensive, my mindset shifts towards harvesting as opposed to allocating. And so then you say, okay, well, what can we afford to buy? And then the market starts paying for real grassroots exploration risk, which we've taken on with metal energy, for example. That's I'd qualify that as grassroots exploration risk that we're taking on. We've managed to convince Tech and Centerra that risk is palatable relative to the cost, right? I mean, if it was a $200 million company, I'd say, it's too rich and you haven't made a discovery yet. But at sub 30 or 35, whatever we are, yeah, we'll take that bet, and so will we. And so we're well financed. We've got a project that's been well vetted. It's not totally grassroots now. It's not virgin ground. It hasn't been drilled, but it's had a lot of work done on it. And again, just like the target I was talking about in McGarry, it's been geophysically vetted many times over. And look, any geo who says this, put a hole in that, please. And then conversely, the same as you talked about, or maybe I did, original metals, right? Whereas we have something completely new. So it's got a resource on it. It's got 600,000 ounces of about a gram gold right in Quebec, right on the highway. But we're not after it. We're after what's underneath it, which has been completely misunderstood and as a result overlooked. We just raised about $5 million on that, and we're going to be drilling in February. So, while that's not greenfield exploration, it is definitely looking for something completely new, which could be game changing. So we're not afraid to go up the risk curve in terms of exploration risk, just because we're so heavy on the geologists, and we've collected a group of really wonderful people, whether that's Charles Baudry, who's the original brains visionary behind Okemiska, now is the guy behind this geophysical target on McGarry, Peter Cashin on original, Charlie Gregg, on metal energy, and his partner Alex Walcott as well, and others. I don't want to name everybody here, but look, we've got a really good team of geologists that allows us to understand the risks, and then we can say, okay, given the odds, what's Craig Perry saying, size of the prize and blah blah blah, which is really clever, but that's he encapsulated it, but that's how we look at it. Same thing.
Yeah. I know you don't have all day to sit around and talk to me, Stephen. So maybe to close it off, what would you consider success for the group as a whole? If we had this same or similar conversation same time next year, is it all of them outperforming? Is having sold at least one company? Is it having added two more? What would you consider success?
Success if I'm still sitting here in 1 year. I learned, this year that health is the most important thing, and never lose sight of that. The second most important thing is your family. So as long as I'm sitting here healthy and my family's sitting here healthy, and then you the same for yours, I'll consider that a success. All the other stuff is noise, Antonio. At the end of the day, business-wise, look, I don't think I'll be sitting here tomorrow saying I've delivered a mine to the market, right? Because it takes more than 1 year to develop a mine, but that's how I define success. Is our objective is to deliver a mine to the market with every investment, every company, every action. It's all geared towards that one concept. It's not just about the money. It's not like I don't like money. I love money. It's also a wonderful scorecard. It tells you how successful you've been, but it's a lost profit or false profit in a sense. I've had no money, and it's better to have some money, but the point is it can't be your objective. Your objective again has to be something greater. And fundamentally, if we do deliver a mine to the market, the money will follow. So from OreGroup's perspective, it's really just about good quality projects managed by good people who all have the ability to finance our efforts. And if we get some tailwinds from the macro, wonderful. That'll be great. It's coming, and just whether it comes in 26, 27, or 32, doesn't matter.
Good. That's a good note to end it on. I'm sure we're going to be having more and more specific conversations over 2026 about the different companies. And for people listening, if you do have any questions for any of the specific core group companies, let me know. And I'll definitely ask them in a future CEO barbecue. But Stephen, for now, thank you so much for doing this and Happy New Year.
Antonio, all the best to you in 2026, you and your wife. And I have to say, you've done such an amazing job in growing your business, which I love. I don't watch all of your videos, but I watch a lot of them. And hey, talking my own book here, the video that you did on Awale, wow, hats off.
Thank you so much for doing this.
Good job. I loved it. I loved it. I thought that was really, really great. So anyways, all the best to you and yours, and we'll look forward to talking to you in 26.
And as always, thanks to everyone for watching Resource Talks. I have a couple of more things to say, though. The fact that this company was interviewed here today does not mean that they're necessarily a good or a bad company. I'm not here to endorse nor attack anyone. I am simply here to ask some questions. If you find that I have failed in asking a question that you would have liked to hear an answer to, which will happen as I'm not an experienced interviewer, please let me know and I will try to correct that mistake in a future interview. As mentioned at the beginning, please understand that mineral exploration and development is an extremely risky business. Losing money is the norm and should be the expectation. This is a very complex sector, and the performance of individual companies typically depends on many different moving particles, including company-specific factors like geology, financing ability, and many others, really, as well as particles that are outside of the company's control, like geopolitics, macroeconomics, commodity prices, and many more, most of which are nearly impossible to fully understand. Moreover, these companies that typically get interviewed on Resource Talks are in the pre-revenue stage, which means they rely on the public markets for the financing of their operations, which could result in shareholder dilution. Furthermore, as a general rule of thumb, you'll be better off understanding that all company communications online, albeit this interview or their website and their presentation and their social media accounts, or even the social media accounts which you thought were your friends and then told you about a stock, everything really that these companies do is intended as marketing. And although I do not make buy or sell recommendations because there is a clear conflict of interest given the nature of my business, many out there do. And you should be aware of that inherent bias and you should be careful out there. That bias is not always going to be clearly disclosed with everyone out there. So it is safer for you anytime you're watching any type of company specific content to approach it with a dose of skepticism and assume that the party telling you about it is biased in at least some shape or form, because there will always be a bias. Again, albeit clear or not. So always ask yourself what the incentive of your counterparty is and never rely on them regardless of their incentives, but instead double check if what they're saying is true, again, by using setterplus.ca. The fact that I have no idea what I'm doing should already be clear to you at this point. I am not saying this to make jokes or laugh with myself. I just simply do not have a long enough track record of consistent investment profits. So I should under no circumstances be considered an authority on anything. Again, although this may sound amusing to you, believe me, it is not amusing and it is not intended as a joke. I'm simply pointing out a fact and warning you not to rely on anything I do or say. Unfortunately, at least to my understanding, nobody out there has any special abilities. The CEOs do not possess any superior knowledge, and they cannot know about what will go up, what will go down, or what will go in circles. Some people even believe that to be rule number one on Wall Street. Nobody really knows. None of us know whether any of the company's activities will result in a success, again, given that we're talking about high-risk activities where most of the times it ends in failure. So unfortunately, try as I may, I won't always catch all red flags or all challenges with the companies. So even if I did ask a few tough questions in here, don't rely on this being all of the tough questions. Again, these are complicated startups with many moving parts, and I am conflicted given the nature of this business. Therefore, I cannot guarantee the quality of anything presented in this video, and you cannot hold me responsible for any losses or damages stemming from the way you decide to use this interview. Viewers, listeners, and readers acknowledge and agree that the information presented herein did not constitute a solicitation or an offer to buy or sell any security or investment or to participate in any trading strategy. Resource talks and all parties involved in the management of the business strictly disclaim any and all liability for losses and or damages, whether direct, indirect, special or consequential or other consequences, however so caused, arising out of any use or reproduction of the content published by Resource Talks or any decision made or action taken in reliance upon it. By consuming this content, all consumers vow to release Resource Talks and all parties involved in the management of the business from all claims, proceedings, or consequences. This is all to say, I know it's a lot of lawyer talk, but this is all to say that you shouldn't blindly trust me or anybody on the internet, and you should do your own research. Once again, social media is meant for entertainment. It is setterplus.ca where you do your research. That's where you'll find the company's official filings, and I encourage you to read and analyze the Management Information Circular, the financial statements, the Management Discussion and Analysis, and whenever available, the NI 43-101 technical documents. If you don't understand everything in those documents, the chances of you losing money are even higher than they normally are in this space. And as mentioned earlier, the chances of even the best analysts in this sector losing money are extremely high, since this is venture capital and it is not for everybody. I'll leave you with one of Charlie Munger's quotes, which I wish I had listened to more often earlier on, which says, quote, "If you don't understand it, don't do it."